let's take a look at that for our chart. This is our high degree trade management or the current bounce that we expect to currently be affecting the market. The bounce comes in at 50%. This is the most important thing about it. This gives us impetus that even though sterling is very weak, the market could actually be still bullish. We are all aware of the rise out of 152 all the way to 168. This has already been segregated into a 1, 2, into a 3. There's been a 4A and a 4B and a 4C. There has been now a higher degree wave 3 inside of what could be a high degree wave 5, or maybe this is just wave 5 and we do a high degree correction. Again, the fact that the bounce comes in at 50%, it's either a 4A as noted, or we are going to be doing wave 5. This segregation here that we see on the side is momentum segregated. It is probably correct. We have an internal 1 and an internal 2. Alright, let's take a good look at it. We have a 1 and a 2 here, then an internal 1, internal 2, internal 3 finishes here, internal 4 finishes here, internal 5 finishes here. This is an internal wave 3. This is an internal wave 4 that bounces at the top of that one. The bounce is very relevant. Means you get a 5. You get a 5, you're going back to 168. Truncated below 168, 167. So this is what we're trading. So this should be an Elliott structure if this is a wave 5. If it is not an Elliott structure, as we begin to trade it, if it turns out not to be an Elliott structure, then of course it's a 4B. If it is an ABC internally and you find that it does not observe Elliott's rules, specifically that a correction in a 3 should bounce at the top of a level 1, then it becomes a 4C. All right, let's take a look now at the internals. There's also a very important development on this for our chart. Sorry, to show that it is a correction. Internally here, you find that we had a segregation of 1, 2. This is internally momentum segregated in accordance with this internal trigger. There is an internal 1, 2, and a 3. The market should have continued after doing a correction 4 into a 5. It did not. The market actually broke above level 1. And this means this is really a correction, right? And it's not a continuation. Most probably then it becomes a wave 5. All right, so we want to trade it and treat it that it is going to be an Elliott structure. If you're very aggressive, you will treat it as an Elliott structure. If you are a bit conservative, you will treat it as an ABC flat. It would mean that as an Elliott structure, this is on the 50-minute chart what we are seeing, momentum segregated here. There is a 1, 2 here. There is an internal 1 and internal 2. Even breakout of that wave 3 that the market is in right now, with an internal 1, internal 2, 3, 4, 5. This ends somewhere at around 164 plus. There is a correction. This is high degree 3. There is a correction into high degree 4. Should bounce above that high degree 1. Optimum entry, of course, is above a level 3 because this is a trending market. We don't want to wait until we go all the way down to level 1. So optimum entry comes in at 162.5. All right, a stop would have to be just below the market low. This is 162.5. You need to be hedged at 160.8, hedged and not stopped. Hedged at 160.8, 160.7. If you're an aggressive trader, you go full size, 162.5. You have a hedge at 160.7. If you're a conservative trader, we will leave room for some error. All right, so we buy half size at 162.5. We buy full size, so if level 3 breaks, if level 3 gives way, of course it's back to level 1. So we go full size at 161.5 usually, above that level 1. If this is an ABC flat, you're going to take the best that is available, 160.8. This is an A and a B, and then you go up again into C. We add at 160.8, right, and of course are able to have a very conservative average of something in between 162.5 and 160.8, any of these levels here, with a stop or a hedge below the neckline for the overall position at 159.5. So let's just take it that we are aggressive. We are going to buy 162.5, right? This level here, level 3. If you are a bit conservative, half size at 162.5, half size at the top of that level 1 here, probably 162. This is 162.96, and we're gonna have a hedge at 160.8. This takes us, of course, for swing traders or position traders back to 167. If you are going to be trading it as an intraday trade, you will just project 138.2 and take our profits there. We were already long, should have been already long as of yesterday, and we would have collected at 162.5, I believe, or 163.